Sherry was just running us through, of course, that negative data print that we got out of South Korea. It's interesting because we're starting to see these green shoots coming through in China, yet we have a negative print when it comes to South Korea. We also had that shocking inflation number out of Australia yesterday. Of course, the pricing in now Reserve Bank interest rate cuts perhaps as early as next month. So how do we trade Asia with so much going on and so many divergent moves when it comes to the health of these economies?
Sure. Well, I think first and foremost, growth is probably one of the things I worry least about in Asia, because I think relative to the rest of the world, you know, we're in a very comfortable position that Asian growth is going to be much higher than many of the other regions. I think specific to Korea in the news today, obviously the memory market and DRAM particularly played a big part in those numbers. And again, it ties into the export economy. I think a lot of this was expected. So the fact that SK Hynix shares have actually gone up today shows that a lot of the bad news was priced in. The comments on their call about the second quarter recovery has surprised people. They were expecting the inventory build-up to continue, or that to unwind into the second quarter and not really see a recovery till the second half. So actually there's some positive news out of those numbers. And I think at a higher level, I think for Asia and tying in with China, there's a lot of uncertainty around the trade wars and the trade dispute, and there's been a reluctance to invest, and that's going to come up in some of the growth numbers. So I think once we get some clarity, then I think firms will start to invest and we'll start to see a recovery in those numbers.
China markets have been under a bit of pressure over the last few days amid this speculation that we may see policymakers there kind of take their foot off the accelerator when it comes to some of the stimulus measures. Do you think that that's likely to happen? Do you think they'll get it right in terms of being able to achieve perhaps 6.4% for year-on-year growth after we, of course, saw that number last week?
Yeah, I mean, again, as a long-term investor in Asia, whether China grows at 6 or 6.5% isn't going to make a huge difference to us as bottom-up investors. I think what you've touched upon is important. It's the quality of growth. So the government's committed to that deleveraging campaign. They want a higher quality growth. And for fundamental investors, this is actually great news, because I think the challenge that many Asian emerging market investors have faced has been two really sharp cycles in China, bull market or bear market, when I've been on the show previously, and that's been hard to deal with as fundamental investors. And obviously easy money and liquidity does drive up some of the lower quality sectors or the more cyclical sectors. So I think as we get a market more based on fundamentals, this is very much positive for us as active bottom-up investors.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.